Hey, everybody, it's Jeff here with the Money Trucker podcast. And I am super excited today because I've got my friend Bryon Tucker on. And Bryon works with a company that is really specializes in a couple things when it comes to tax. One is research tax credits, which is a very interesting area. And a lot of businesses don't know that this is available to them. The other part is we're going to talk about some new things that they are doing regarding last year's CARES Act and some of the things around PPP and retaining employees, because there are some credits that are available to you there. So we're going to talk about that. Stay tuned. We'll be right back in just a minute. Hey, everybody, it's Jeff here once again with the Money Trucker podcast, and I'm super excited to have my friend Bryon Tucker on today. Hi, Bryon. How you doing, man?
I'm great. Thank you for having me, Jeff.
Thanks for being on the show today. We're really excited about what's going on with a lot of the things in your world. Let's kick it off. Tell us a little bit about yourself and how you got here, and then we'll jump into the business and talk a little bit about what's going on in your business right now.
So my name is Bryon Tucker. I'm in the Avery Ranch area up here in North Austin, and I've been in the financial world for about 20 years. And I was lucky enough to come, meet you here 2-3 years ago. So we kind of both are businesses that work with businesses. Mm-hmm. And so my thing is I love helping businesses thrive and help them be successful. So especially with the kind of challenges we've had over the last 18 months or so, it's kind of nice that we've been able to help some businesses despite the issues that have been going on. So.
Absolutely. So let's talk about that. Let's talk about the kind of the core business that y'all are in on the tax credit side. So tell us a little bit about that.
Well, first, I kind of mentioned the tax world. It's the tax code is extremely complicated. Obviously, there's 5 million words in the tax code. So most your traditional CPAs, that you kind of familiar with what they do, they, take your expenses, they reduce your liability so you pay less taxes. So that's what most CPAs do. But it was tax credits created a long time ago that most were designed for small to mid-sized businesses to stay here in the United States. However, the large corporations with the expensive tax attorneys and whatnot have been the ones taking advantage of this. Amazon, Netflix, and companies like that, where the small and mid-sized businesses haven't been able to take advantage of it because most CPAs don't know how this works. So we have a consulting firm of highly specialized CPAs and attorneys that work with R&D tax credits. Many businesses out there qualify, but they just haven't been taking advantage of it. So that's basically in a nutshell. But we can help any business. It's making anything, testing, creating anything. Okay. And that's pretty broad. It became a law in 2015 under the PATH Act. And even with that, there's more liberal and broad definitions of what qualifies for this. So there might be some CPAs out there that think they know about R&D because they learned about it 10, 20 years ago, but things broadened under the PATH Act. And so now we've been able to help a lot of businesses that most people wouldn't think would qualify for R&D.
And so, what are some of those, because you think R&D, and it's like, well, I'm like creating something and I've got labs and all kinds of stuff and things like that. What is really R&D under that law, or what's considered, or broadly? Yeah.
Well, first I'll say I'm not a CPA, so I
There you go.
can't really get too into the weeds as far as what it is. I can just mention the kind of companies we've helped and kind of
Yeah.
explain loosely why they qualify. You know, we help some of our biggest clients are construction companies, for example.
Okay.
Construction companies build, manufacture homes. They have different systems that they've created for building homes. They may be working with experimenting with new materials. So they may not have made something themselves, but they had a hand in getting it made. So I mean,
Okay.
obviously tech companies are big, the biomedical world's big, but we help lots of manufacturers. I've helped some local breweries and distilleries. So anybody that's making anything, that's just
Yeah.
a really broad, easy, way to define it. But people say, well, what niche are you looking for? Who do you like to help? Well, anybody that pays taxes, has
Yeah.
employees, and makes a profit.
Yeah.
To see if you qualify with us, it costs nothing.
Hmm.
So it doesn't hurt to at least see if you qualify for it.
Yeah.
So,
Yeah, exactly. And I think you and I were talking one time, like even doctors' offices and stuff like that,
yeah.
a lot of times can be under this because of the things that they do.
Right.
Um,
Yes. I mean, I one of my best clients is a doctor, an ear, nose, and throat and plastic surgeon. And,
okay.
you know, the the medical world and the dental world, things progress very fast as far as the medications, the processes for healing people, the different kinds of software and the machinery that they use. It progresses fast, and so doctors are experimenting with new techniques. So yeah, the medical world is big, and there's some of my bigger clients, dentists and doctors. So
Yeah.
yeah.
And
I
I
mean,
mean, I know it's simplifying this, but I mean, this is actually a tax credit and
right.
not just a deduction from
Yes.
your.
And so what it is so people think this is a write-off, and it's not. The company has to pay taxes. That's one thing people need to remember is if you have a creative CPA where you've written off all your taxes, you're showing losses, or you're breaking even, you're not really going to qualify for this. Because what these
Hmm.
are is it's a bucket of money. It's their credits.
Hmm.
We can go back the last 3 years on a business's tax returns, and with a little bit of qualification paperwork, their corporate tax returns, and depending on how they're structured, if it's like an S corp or something like that, we need the personal tax returns too. Our CPAs evaluate that, and they're able to determine whether or not they qualify. If they do qualify, we amend their tax returns,
Hmm.
and then they get money. They get checks back from the IRS, literal checks. And I have a copy of one right here. This is a local business here in Austin. Just one of this is 2018. They got back roughly $45,000 with about $3,000 in interest that they got
Hmm.
back. So, but yes, these are tax credits that are replacing the taxes. So bucket of money replaces the tax they paid. The business owner gets that back in the form of a
Hmm.
refund.
Yeah.
So
So it's pretty straightforward. And like I
it
said,
is.
it doesn't hurt to just test it out and see, okay,
Mm-mm.
is there something, that potentially is there? And if there isn't, there isn't. But like I said, if you've got a profitable business,
Yeah.
you're always looking for ways that you can simplify
Yeah.
that, and get whatever back that you possibly can. Take advantage of the tax laws. It's not tax cheating. It's
Mm-mm.
just taking advantage of laws that exist on the
No.
books that not everybody knows about.
And
But
people are, they are some folks. The IRS is a scary organization to deal with. I mean, we all have fears about that. But we have our CPAs have minimum master's degrees. They've written books, lots of accreditations. We have a tax attorney. So you know we defend our work, and one of the things that when they sign the consultation agreement, what happens is that we do a preliminary evaluation, and we provide a credit projection report. It's just showing that the business owner will get, let's say, between 45 and 50,000. The average is about 75,000. It can go all the way up into the millions for some of the larger construction companies and stuff like that.
mm,
But If the business owner decides they want to proceed, they can. If they don't have to. There's no charge in seeing if they qualify it. But if they want to proceed, they sign a consultation agreement. And within that consultation agreement, it states that our CPAs will defend our work. So.
Yeah. And so, I mean, how far out does that go? Beyond the 7 years of withhold, or, that you have to.
We're not going anywhere. I mean, our CPAs, I mean, most of our CPAs, they're going to be around. So, and they're not, about to retire. I mean, we working with CPAs that, I mean, this is a business that we're thriving with, and we're not, and it's not just our CPAs, it's us, American Incentive Advisors. We're consultants, so we back up our work regardless. So
awesome, very cool. Well, what's new in your world now?
Well, great question. So one thing that we've really excited about is we've had some of our CPA and our we have a CPA that also is an attorney, a tax attorney, and we've been digging into this CARES Act. And so people are pretty familiar with PPP loans and whatnot, but there are tax credits for that as well, and it's pretty substantial tax credits. I mean, it's mind-boggling how much money we're getting back for some of these companies. I mean, we're talking, our average return credits for R&D are about $75,000. We're looking around, about $250,000 per business on average we're getting back in these tax credits. So
can you explain a little bit about that? Because I think some people kind of understand it, but that, just a little bit of, and really layman's terms here, and I'm not asking you to be a tax advisor, but how this works, and what this was under the CARES Act that there's these credits coming from.
So a part of the CARES Act, businesses were obviously put under, they had issues dealing with being shut down.
Yeah.
Restaurants, everybody was affected. Everybody, doctors, dentist offices, and what fits under this, we have some businesses that can do both the R&D and this tax credit. So this is much broader because everyone was affected by COVID. And one of the stipulations is that the business owner has to have a significant loss in revenue, which obviously happened for some.
It wasn't, if you had a physical location, you pretty much got affected.
Yeah. So and depending on the kind of business, some were able to, shift and make adjustments and still either, succeed somewhat or thrive. But I mean, I know some of the local restaurant and brewery owners and whatnot, and they weren't able to send their kegs off to the restaurant because the restaurants weren't open. So, there's supply line issues. There's all kinds of reasons, but one of the stipulations is that they have to have a loss of income, but that's not a requirement because we've been helping construction companies, for example, that did very well during this time get back tax credits. Why? Well, because they were mandated, they had to wear masks, social distancing, certain ways that they built homes or built the building. They had to kind of do things a certain way according to government mandate. And the wording in the tax, this particular part of the tax code, this law, I don't know what's the proper term for it, but it's pretty broad and general. So we're able to, it doesn't, I don't know what's the right word for it. I'm not the legal guy, but everyone was affected to some point. And the supply chain issues, for example, I go to Wash and Roll up the street. That's why I wash my car. If you notice that every other stall had to be closed, was not open, or you go get your hair cut, and even going into now, more recently things have opened up, but even here, you had the social distancing, you weren't able to pack as many people into a restaurant as necessary. And even though they might have done well with the whole curbside service, all that extra burden on the business allows them to qualify. So that's another thing it doesn't hurt to at least see if you qualify. Because if
Yeah. Now, is this another one of these situations where you had to have made a profit or you had to have paid in taxes to qualify for this, or?
this is different. No, this is not
Okay.
based on the taxes that you pay. This is that's a great question.
Yeah.
It's not the same thing. And people
Yeah.
that might think they don't qualify are the people with the PPP loans, but people that receive those loans qualify for this, which is great. And that
Right.
was kind of a recent law change with that.
Mm.
So, and just to kind of whet your appetite on some of the numbers here, we can help for 2020. The max tax credit per employee is $5,000.
Okay.
The max tax credit for 2021 is $28,000. So do the math. If you have 100 employees for 2020, you know, some of these construction companies or larger businesses might have 100 employees. We can go up to 500 employees, 5,000 per employee. I mean, that's a lot of money. So
yeah. No, it's, I mean, you know, and once again, it's like, man, especially right now, as businesses are just now firing up, it's like, man, that's a huge help
yeah,
of having a little of that extra revenue, or, you know, that extra money coming in that
yeah.
can help to, all right, now I can get people back to work and fire up the, you know, the whole process.
It's one of the, I'm passionate about it. When I show somebody how much money they're getting back, especially if they've had a really tough year,
Yeah.
and they find out how much money they're getting back, I mean, some of them get teary-eyed and get excited, and you know, they're going to put that money back into the business and grow. And you know, it's at a good time too. You know, they might need more capital. Now they can expand, they can start hiring again.
Yeah.
So yeah.
So is it just based on like the entire, you know, because I can think of my own business. I had some people that had to let go, brought some people back, hired other people on. So is it based on your total payroll, or is it kind of based on each individual employee or whatever?
It's kind of broken down in the quarterly periods. And so there's going to be, I mean, there's a several page questionnaire that we ask, and I don't think it's overly complicated. We use like profit and loss statements and stuff like that.
Got it.
But it's based on a quarterly, you know, so I mean, things obviously progressed. At first, everything was completely shut down. You know, dental offices were completely shut down, for example. And then, you know, my dentist I go to, you know, they were shut down, and then they kind of did the whole plastic screen, you know, and then we walk in, and you had to, every other stall was open, and you had to took your temperature, and all those kind of things are a burden on the business. So those can be help the business qualify for these tax credits. But you know, things progressed, and you know, slowly here in Texas more quickly, things opened up more fast, 25%, 50%, 75% open. But we've been helping some businesses in California, and that's where some of the biggest tax credits have been, because they've been the most shut down.
I don't think they're still yet fully open at this point. So
I just got back from there about 2 weeks ago. So they're actually lifted the mask mandate, but still, you know, it's not 100%.
Well, it's like we were probably 8 to 10 months ago.
Correct.
You know, that's what I was telling one of my friends that's up in Chicago. It was that, you know, he's like, well, you know, what you mean you guys are like got people in restaurants and all that? And I'm like, I think you guys are probably about 8 to 10 months behind us.
Yes.
You know, as far as what's happening, and you know, this is what's going to happen.
Yeah.
You'll eventually get to the point where you'll feel normal again.
It makes me feel grateful to be here, but it's also, if there's a way I can help those businesses, so we can help all 50 states. I mean, I moved here from Hawaii, and they were also very locked down. So I'm working on some files over there. So yeah, it's exciting time. You know, the ones that survived, you know,
we're still kicking.
Yeah. So
as you're talking about the sheets of plastic and all that, all I could think of is in our co-working space is my wife and I going through when we were reopening and putting like blue masking tape on certain positions in the chairs and stuff, you know, on the tables and all that, so that we didn't have people side by side. So
that's falls under the employee retention tax credit is what we call it. So yes, that's all. And there was a lot of stuff we had to do, put little stickers in the ground and make sure people were separated. And that's all requires extra work on the business. They got to make sure people are in line, they're spacing each other.
Yeah.
Temperature, that's just, so
not to mention the extra money it costs to do all that stuff. And,
yeah, the equipment,
all those things.
Yeah, the thermometers and plastic, and you got to have a contractor come in and put the plexiglass up, and it doesn't seem like much, but when they're in short supply, all those little things cost a lot, especially when you're already strapped, you don't have as much income coming in. So
revenues are down and your expenses are up. So I can relate. I definitely can relate in that world. So thanks. I mean, this is great stuff. So what we're going to do is we're going to take a quick break here, have our sponsors come on, and then as soon as we're done, we're going to come back with our Fast 5 questions, and Bryan's going to give us his rundown on those. So hang on. We'll be right back in a second.
Hello, it's Jeff here for BK Wealth Consulting. BK Wealth Consulting is a wealth management and registered investment advisory firm with a little bit of a twist. BK works specifically with small business owners and self-employed individuals. And the whole idea is to help business owners and self-employed folks figure out a strategy to exit from their businesses. So whether it is a business valuation, developing an investment and financial plan and strategy, or developing an exit strategy plan for your business, BK is there to help you and has the skills and the talent to do it. So if you want to learn more, go to www.bkawealth.com. That is www.bkawealth.com.
Hey everybody, it's Jeff here once again, and we're back from break, and we're going to hit the Fast 5 questions with Bryon. So Bryon, you ready?
I'm ready.
All right, so first question. We're kicking off with, you wake up in the morning, business is totally gone, you got $500 in your pocket, a laptop, computer, place to live, food. What are you going to do first?
I'm getting on the phone. My sphere of influences, I'm calling people like you. I'm taking you to lunch and just figuring out what's the next step to take. My sphere of influence, just reach out to good people.
Awesome. I feel the same way about it. It's like, man, I've spent years building it. I'm just gonna leverage that sphere of influence. Yeah. All right. Second question. What's the biggest business mistake that you've ever made?
Well, there's two that are kind of related. The biggest mistake was spending too much time on marketing and me and fancy name tags and clothes and whatever, and not enough time just meeting people. Networking is such a big deal, meeting people. And, I've met you in networking events, and it's, and with that consistency, like, you just can't go to a networking event once, flash around your cards, and then expect to get business. Is that you have to be consistent. You have to help other people out first. Don't expect anything when you go there. Just go there to build relationships. But don't just think that you're a flashy business guy with a business card and you can, consistency pretty much.
Yeah. Basic marketing is good, but totally agree with you. You just got to get out there and hustle, and they call it networking for a reason. So.
And even when you're doing good, mistakes I've made where I've done well for a quarter, let's say, and the money's coming in, and then I'm like, okay, you kind of don't go to that event or whatever because business is rolling in. But then if you don't keep that consistency going, all of a sudden phone's not ringing as much. It's because you weren't planting those seeds for the future. You were just, so the consistency, you got to stick with it.
Pipeline management, man, it's the salesperson's, the lament. Oh, we've all had it.
Yeah.
Oh man, I'm doing great. I've got all these clients, and oops, I forgot that I need to make sure I keep getting more people coming.
Exactly.
All right. What is a good book that you recommend for entrepreneurs?
Well, I mean, I'm sure you've heard this a million times, so I'll just say it is, Napoleon Hill, that's the obvious one. Think and Grow Rich, and How Do You Win Friends and Influence People? That's the biggest one. That was good for me. But the one I just read recently, and we were just talking about networking, is Networking Like a Pro. I'm in a BNI group, and so I've been reading Ivan Misner's books. And so that book was good on how to network. you know, how you go about networking, spending quality of time doing it, and what to do after you've met a person. So that was a good book for me right now, is, and especially now going, but which is kind of cool. The book was written prior to the whole COVID shutdown, but now we're starting to meet again in person. You want to make the most out of your time as possible. And if you're just going to meetings and spinning your wheels, and if you're not doing, you're just wasting your time driving there, getting ready. So networking, that process, is, I think that book is good for that. So
awesome. Well, we've actually been using one of Ivan's books, the 29% Solution. We've been doing some shows, basically going through that book, which is a 52-week strategy to improve your networking. So that's another phenomenal book. So I haven't read the Networking Like a Pro, so I'm interested in that. And we'll have that in the show notes page so that people can go to that.
Okay,
so what's a tool that you use in your business? It might be something like an Evernote. I mean, I've heard everything from Evernote to my phone to a yellow legal pad. What's something you use every day in your business that you recommend?
You know, I'm not fancy, and I do need to get a good CRM system going, and that's on my list to do. But I just use Google Contacts and Google Email, and I save every email in the folders for each person that sends me their information. So if you have something I can provide for my clients, I keep that in a folder. And so I just use those two things: Google Contacts and the Gmail.
Yeah,
and it's nothing, you know.
It doesn't have to be complicated. Yeah,
No.
It doesn't have to be. I mean, people make it way too complicated. It's funny. I just one of those podcasts I did. I was talking with people, and I mean, I'm a tech guru. I love all that stuff, but I'm like, I still use a very simple spreadsheet that I created to keep track of contacts and when I need to follow up with them. And it's automated, it's easy, and I can just keep up on top of it.
I use a Word doc for my, just a regular Word doc for my, I have different folders for different kinds of clients or different Word docs. So I just kind of keep it simple. But to me, it's more about getting out there, because when we're talking about taxes, you have to build trust, and they have to trust you. And so I need to spend most of my time getting to know people and knowing me, and that I'm a legitimate person, I'm a good guy, I'm going to be around, I'm not going to, get your tax credits and then disappear. So building relationships is more important than anything. You can, that's part of what I was saying before, is you can spend a whole bunch of time spinning your wheels with all this technology, but you should have been out, meeting people.
People can hide behind all the marketing and the technology, and it's about building relationships with people, whether it's online or in person. You still got to build relationships. Well, Bryon, how does somebody get a hold of you? What's the best way for people to get a hold of you?
Well, business owners all have their own preferences. I mean, they can call me, email me, text me. I understand completely. I'm working with a dentist in California right now, and he text messages me in between meetings. It just, whatever's easier for the business. So they can call me.
Okay. What's your phone number?
512-815-2515.
2515. And then what's your email?
recoveryourcredits@gmail.com.
Okay. At gmail.com.
And that's plural. We want to get you more than one credit back.
So that'll be in our show notes page, folks. So if you look down below in whatever chat or wherever you're at, you can get Bryon's contact information. I would encourage you to just reach out to him. It doesn't hurt, and it doesn't take much time out of your day to check on it and see if you qualify. If you don't, that's fine, but at least you'll know that you've exhausted everything that you possibly can at that point to help it. So Bryon, thank you so much for being on today. We really appreciate it. Folks, we continue to do these shows where we bring experts on, where we bring entrepreneurs on, where we do our Financial Fridays. We do this for a reason. We want to make sure that you are prepared to continue to run your business and you don't have time to be finding all these things. We're finding them for you. So, just keep your eye out for all the shows we're doing. Whatever channel you're watching us on, whether it is YouTube, whether it's Rumble, iTunes or Apple Podcasts, Google Podcasts, iHeartRadio, wherever you're watching this, make sure that you subscribe to the channel. Make sure also, if you have any questions or if you want some, other information on future shows, please put comments in. We'd be more than glad to keep those. And then that helps us to design shows. We want to design shows for you, not because we want to get out here and talk. So thanks a lot. We appreciate you. We'll see you back here on the next show, and have a wonderful week.
Give me what I want.